2025 is coming up, and I've been doing a lot more of those mistake videos and mistakes stock market investors make, and many different educational stuff which I haven't done. And a lot of you guys have been enjoying them. You've been finding value. I'm very grateful. 7,000 views. I'm very surprised. So thank you very much, and I hope you continue enjoying them. And on Wednesday, we did have a decent pullback. Nothing too crazy. Decent decline, 3%. Some stocks went down 8, 10, 12%. And to me, it was very entertaining. It was funny. But I shouldn't say it's funny, but I was just very upset and very shocked to see the market reaction from most retail investors on X, on YouTube, on Yahoo Finance. They were giving up on stocks, questioning their thesis, wondering if they're overpaid, looking at insider selling, all that stuff that were present just a few weeks ago, but they're looking at them now. Why? Because the stock went down. This is what happens. This is why, most people, they get emotional and they cannot handle stock market drawdowns. And for me, seeing the reaction and seeing the panic that we saw just because stocks went down made me realize that most new investors that came in after 2022 that haven't experienced a pullback are absolutely not ready for any kind of a market crash, any kind of pullback, which you should not be upset if it happens. You should be happy if it happens, because this is when the money is made. The money is not made when the market is going up. It's made when the market is going down and when people are selling, and you're doing the opposite of most investors are doing. And I'm going to talk about that stuff a little bit later in the video. And I'm going to try to give you the right mindset in order to be able to navigate certain things about a market pullback or drawdowns in general, and be a little bit less emotional about the market and welcome dips and be happy the stock is going down instead of being upset and waiting for news for the stock to go up or whatever it is. And I really hope you enjoy it. But I believe there's two main reasons why investors got upset on Wednesday and why investors in general, they get panic-stricken when their stock go down. There's two main reasons. The first one is they have the wrong mindset, and that's what I'm going to try to focus on here. I'm going to try to give you the right mindset that I learned from Warren Buffett about that stuff, and it's going to help you a lot. But the second reason is, and I'm just being honest, a lot of you guys are not going to make it. That's just the way it is. Like, a lot of people, they join in the market, they never experienced a pullback, and they all long-term investors. They're all going to be the next Buffett. Everyone is a long-term investor until the stock market goes down. Then the market starts going down. They start finding reasons not to buy the stock. It goes down 40%. They can't even sleep at night. They sell their stocks to feel better. The stock market goes up. It will recover. They call the market a scam and they stop investing, or they go to index funds. That's just the way it is. It happens every single time. So who do you think is selling whenever the market is bottoming out? You think institutional investors are selling, or is it retail investors because they're losing sleep at night? It's just the way it is. So a lot of people are just not mentally fit to own stocks. Even Buffett talked about it, and he said you shouldn't own stocks if a 50% decrease in their value in a short period of time would cause you acute distress. His own stock, Berkshire Hathaway, went down 50% 3 times. Did he sell his stock in 2009 when it went down 50%? Of course not. And it stayed flat for 7 years. 7 years of no returns. Most people, if the stock stays flat for 2 months, I get comments, your stock is not going anywhere. It's insane, So most of you guys have the wrong mindset. And that's what I'm going to try to talk about in the video. And it's mainly the concept about Mr. Market. And this is a concept that Benjamin Graham talked about in his Intelligent Investor book, which now doesn't matter too much because you could just buy Fartcoin or whatever and you become a millionaire or whatever it is, But this is the whole concept that Mr. Market is your servant and not your guide. And Mr. Market is an imaginary person. His name is Mr. Market, okay? And the whole example he gave in an annual meeting was, let's assume you go into a specific neighborhood and you buy a house. You look at the house, you compare the house to other homes in the neighborhood, you get an appraisal from the bank, you get an inspector, you get all the research you did to buy the house. And you determine it's worth $200,000. You make an offer. You buy it for $200,000. Okay. Now, right beside you, you have a drunken neighbor. He drinks all the time. He's always drunk. Every night he's drunk. He's always drunk. And his name is Mr. Market. Okay. And he comes every night to your house. He knocks on your door and he makes you all kinds of crazy offers to buy your house. Someday he might come in and he might offer you $100,000. He might say, I'm going to buy it for $100,000. Now, when you hear that, would you start crying? Would you panic? Would you lose sleep at night just because he offered you $100,000? No. Why? Because you know the house is worth 200,000 because you did your research and you know what you own. Someday he might come in, he might offer you 400,000. Now in this case, you know the house is not worth 400,000 and it might not be worth 400,000 in 6 or 7 or 8 years. So you might decide to take advantage of his irrationality. And this is what the market is about. The market is here to serve you, not to instruct you. Price action, all those quotes you get, you're here to take advantage of them, not for them to take advantage of you. A lot of you guys, you let price action dictate your day. Like a lot of you guys would tell me, I'm having a bad day. So I say, why? You say, oh, because my stocks are going down. If this is how you think, you're going to sell the bottom. I'm just being honest. If you have a 50% crash, you're going to sell the bottom to feel better so you can sleep at night. I'm just being honest. You have to know the value of what you own. This is what Peter Lynch says. He said, know what you own and know why you own it. If you know the value of what you own, then whenever Mr. Market gives you a crazy quote, when the market is going down for no reason related to the fundamentals, you take advantage of his irrationality. And sometimes he might offer you a crazy premium where the valuation is beyond any expectation. You might decide to sell, but you have to take advantage of him. He should not be dictating your emotions, dictating your mood. And the only way you're letting him do that is because you don't know what you own. You know, a stock I talk about, for example, is HIMS. HIMS is a very volatile stock. It goes up 200%, it goes down 34% on no news. Then it goes up 130%. It goes down 47% on no news. People sell the bottom. It goes up 150%. Then it goes down 30% on no news. No news at all. But a lot of people, they just cannot take the volatility. And they don't know why they own HIMS, why you own Palantir, why you own those stocks. If you bought it because of a YouTube video, because of a Seeking Alpha article, you did not do your own research, you do not have conviction, you're going to sell the bottom and you're going to get upset because your stock went down. That's just how the market works. And this is something that I always say. I say that the best time to buy is when it's not easy to buy. The worst time to buy is when it's easy to buy. So if you're buying a stock, for example, any stock, and you buy the stock and it goes up and the market's going up and all your friends are buying those stocks and everything else is going up, like a few weeks ago. So you buy the stock and it goes up and you feel good. You feel like it's easy to buy the stock and you don't feel frustrated. You don't feel it's hard. You feel that everything is going to be fine and you're thinking about how much money you're going to make. Normally, this is the worst time to be buying. I'm not saying that you're not going to make money in the long term or the company is not good at all. I'm talking about it in terms of a behavioral standpoint or from you could say a sentiment standpoint. But normally, the best bargains that you get, the best time to buy is when it's not easy to buy. Whenever people are saying this is the next 2008, whenever SVB is going to happen, and you have all the market crash videos on YouTube telling you why you shouldn't be buying stocks. Whenever you want to buy and you're worried, will the stock go lower? Are we going to have the next 2008? Is another bank going to fail? Is something bad going to happen? What if the stock go lower? If you have all those doubts, normally this is the best time to be buying because everyone else is having the same doubts and they're not buying the stock. They're waiting for the perfect time to buy. And the perfect time to buy is normally doesn't exist. And it's normally when everything is great. But the best time to buy is when everything is not great. And whenever stocks are going down, whenever everyone else is selling, this is the best time to be buying when it's not easy to buy. But most investors and retail investors, they do the opposite. For example, on August 5th, retail investors, they sold $1 billion worth of stock and institutional investors bought $14 billion. Retail sold $1 billion, institutional investors bought $14 billion. Why does retail investors always sell the bottom? Why? I think there's a large part of it has to do with the internet, with YouTube, and with a lot of stuff on social media. This is an example. I highlighted that on Twitter, for example. This is a trucking unemployment chart, and it says that trucking, transportation, employment, whatever, is declining, which is signaling a recession. Okay. Now, if you look at this chart, it has been declining since 2022, and this chart gets put up every single week, but it gets no attention. On Wednesday, this chart got 1,200 likes. Okay, and people were going crazy on it. This is what I wrote. I said, it's been valid for over a year. The only reason it's getting attention now is because stocks are going down. And this is what happens when stocks are going down. Instead of investors looking for a reason to buy, they look for a reason why they shouldn't be buying, why they should wait, why stocks are going lower, because they're scared of losing more money. So they watch the YouTube videos, they watch all those things on X, and most people, they're not making money buying and selling stocks. They're making money by playing on your emotions, by playing on your fears, by selling your fear, by selling your drama. That's why they post those bearish charts when the market is going down, and they post bullish charts normally, when the market's going up. I'm one of the few people on YouTube. Even this video, I posted when the market's going up. If you look at my track record on August 5th, I was posting bullish videos when the market's going down. I do the opposite because I make my money buying, selling stocks, not posting 3 times on YouTube. I'm just being honest, guys. But this is what people do. When the market goes down, they start finding reason why they shouldn't be buying the stock. Is it maybe it's going to go lower? Is it going to miss on earnings on the next report? The Fed's going to hike or cut interest rates. Something's going to happen the next 2008. A bank is going to fail. They forget all about the long-term thesis, all about how much the stock is going up, and all their focus goes on the next quarter. It's crazy how the whole sentiment changes when the stock goes down 5%. And even if you watch this video, you're going to understand what I'm talking about and everything. But if the stock goes down 10% next week, you're going to forget this video. You're going to be watching bearish videos on why the market is going lower. I know how it works, and that's just how it is. And that's all I wanted to say. It's maybe not my best videos to explain that stuff, and it's hard to explain. But the main takeaway is that Mr. Market, which is an imaginary person, is here to not tell you what to do, is here for you to take advantage of him, and not for him to dictate what you do. This is a very important point. And the best time to buy in the market isn't when everyone else is buying, is when no one else is buying. And whenever you see a lot of euphoria in the market, whenever you see a lot of things that was happening, like were happening a few weeks ago, holding some cash, like I said in this video, is not timing the market. It's just being disciplined. Like if you buy into a stock or a company and they have a good balance sheet, would you say they're trying to time the market? No, maybe they're just holding some cash. If their stock goes down, they buy back. Is this timing the market? A lot of people are not open-minded enough. There's always certain signs of euphoria. The meme coins, the hawk to a girl coins pumping up, fart coin or whatever, the euphoria that was happening, a lot of the new people entering the market, a lot of the PE ratios at sitting at record highs, and a lot of other things that are happening, the AI bubble, quantum computing. Then next year when the market goes down, people will look back. They will say, oh, that was obvious. Well, why didn't you hold some cash? Oh, because it's timing the market. No, it's just being disciplined. So that's all I wanted to say. Holding some cash isn't timing the market. The best time to buy is when it's not easy to buy. And, if you understand the concept of Mr. Market, you will be happy that the stock market is going down, because the money is made when the market is going down, not when the market is going up. You just don't see it in real time. You see it later on because you're being rewarded to do something most people are not willing to do, because they'll be selling and you'll be buying those stocks. And this is all I had to say. Not financial advice. Hope you got something out of it. Thank you for watching again, and I'll talk to you in another update.